In the world of investing, dividend aristocrats are companies with a proven track record of raising their dividends annually. Because of this consistent performance, many investors consider them the finest equity income investments you can make. So what exactly are dividend aristocrats? Dividend aristocrats are public companies that have consistently raised dividends every year over the long term. There are several listings of dividend aristocrats, but the best known one is the S&P 500 Dividend Aristocrats Index. Companies on this Dividend Aristocrats list have increased their dividend payouts every year for the last 25 consecutive years at least, feature a market capitalization of at least $3 billion. They saw average daily trading value of at least $5 million for the 3 months before the last rebalancing, and they are included in the S&P 500 stock index. S&P Dow Jones Indices compiles the annual list of qualifying dividend aristocrat companies based on information for the prior year, and it rebalances the percentage each company occupies on the list quarterly. S&P Dow Jones Indices published the most recent Dividend Aristocrat list on January 1, 2022. To maintain its status as a Dividend Aristocrat, a company must raise its dividend payment at least once during the year. New companies are added to the list as they reach the 25-year threshold. Once a company falls off the list by skipping a dividend increase, though, it must wait another 25 years to get back on the list. How to invest in Dividend Aristocrats? If you're interested in adding one or more of the Dividend Aristocrats to your portfolio, there are two ways you can approach it. First, you can purchase shares of stock in individual companies from the list. When determining which stocks to buy, it's important to do some basic research to see how they compare. While all of the Dividend Aristocrats increase dividends year over year, they don't all pay out the same amount or increase dividends at the same time. For that reason, it's helpful to take a closer look at each company's dividend history. It's also important to consider which dividend aristocrats are the best fit based on your personal preferences. For example, if you're focused on promoting ESG principles in your portfolio, then you might want to avoid companies that aren't committed to sustainability. The other option for investing in dividend aristocrats is to purchase mutual funds, exchange-traded funds, or index funds that include them. The upside here is that you can get diversified exposure to multiple dividend aristocrats in a single package. When investing in dividend aristocrat funds, pay attention to the turnover ratios as well as the expense ratio. The turnover ratio can determine how many capital gain events are triggered within the fund each year. The expense ratio reflects your cost of owing the fund annually, expressed as a percentage of assets. Both are important to consider if you're concerned about holding on to as much of your dividend income as possible. So is it worth to invest in dividend aristocrats? Dividend-paying stocks can be a complement to any portfolio in which one of your goals is producing income. Depending on where you are in your journey to retirement, you might choose to reinvest those dividends into additional shares of stocks to grow your portfolio and have a bigger income stream later, or draw on dividends for income now. Creating passive income is appealing, though there are some potential drawbacks to dividend investing. For one thing, you have to consider the tax implications, since dividends are subject to double taxation. Dividends are taxed before they're paid out to you, and you then have to pay taxes on them yourself. Additionally, dividends aren't guaranteed. If a company posts poor earnings, for example, that could result in dividend payouts being reduced. In terms of whether the dividend aristocrats in particular are good investments, there are some things that work in their favor. First, these companies have already proven that they're capable of increasing dividend payouts consistently over time, so it's less likely that you can see your dividend payouts decreasing when investing in one of these companies. Beyond that, companies included in the Dividend Aristocrats list tend to have strong fundamentals. They may be established leaders in their particular industries, carry low levels of debt, and generate increasing profits year to year. That's reassuring if you're looking for stable companies to invest in that can weather different levels of market volatility. You may also experience better returns from dividend aristocrats compared to other dividend-paying stocks. Again, that's largely owing to the fact that these companies are typically larger, more established players. Of course, it's important to keep in mind that if you're not solely focused on dividends, you might see better returns by focusing on blue-chip growth stocks instead.